Good morning, everybody. Hey, welcome to the 29th of October. I hope y'all are doing well as we head into the final days of October here. And yesterday we did have a nice looking day on the markets. Everything was up, looking good. And we'll talk about how that might impact today as we have some more earnings coming out and such as that. But before we do that, though, let's not forget that in the world we live in, there are so many things that are out of our control. But you can take control of your investment portfolio by knowing the amount of risk you have and making sure that it truly lines up with the amount of risk you should have in your portfolio. 60% of the folks out there have too much risk going into retirement. Give me a call at 863-382-0037 to schedule your core retirement analysis. And then we've got Dave coming up next.
5.7 Light FM. Peacefully. As Journey there, they call me Morning Dave. We're at 8:40 now. It's 20 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. You really should do that. Your financial advisor ought to be Phillip Statler from Statler Financial Services, who joins us to talk about what's going on with your money right now. Phillip, good morning. How you doing today?
Hey, good morning, Dave. Other than a little computer ifs and hopefully we just make it through the next 15 minutes. Okay. Hey, but yesterday, not a bad day on the market at all. Way to start off the week.
We really needed it, too, after a few kind of rough days last week. S&P and the NASDAQ both were up about 0.3%. Dow was up 0.7%. I don't get the Russell 2000 on my regular listing, but I gather they led the parade up 1.6%. That equated to a 273-point bump up in the Dow, 15.5 in the S&P, and 48.5 on NASDAQ. Boy, happy days are here again. That in kind of contrast to the individual issues we're hearing about, right?
Well, that's right. We've got having a hard time finding any winners this morning on my tip sheet.
Absolutely. I mean, this is going to be an incredibly busy week. It's by numbers anyway. More of the S&P 500 are going to be reporting this week than any other week during earnings season. The one that's the glamour stock that's going to really drive people crazy comes up a little later on. Today, as a matter of fact, Alphabet is going to report. We've had one of the Magnificent Seven report already. That was Tesla. Google starts off as number 2 among the Magnificent Seven, and if the tech world is still driving the market, that's probably going to be the big market mover of the day. And we can cross our fingers for up because, well, I'm sorry, Ford kind of stunk the place up last quarter, didn't they?
They really did, Dave. Though I will say they really didn't when it comes to earnings because they actually beat expectations by 2 cents a share, came in at 49 cents profit per share, and their revenue was, let's say, about a billion and a half more than expected. So the numbers look good. They had some disappointing areas when it comes to their EVs, and their guidance is killing them today. Their guidance, yeah, their guidance was just not good, Dave. So they are they're trading down. Probably I don't want to say they're the biggest loser, but they're down 6.8, almost 6.9% this morning.
And that's smart because their actual per stock price isn't all that big to begin with. Ford's been keeping their stock at a pretty common touch price level. I was giggling when you said a bit of a disappointment in their EV. They lost another $1 billion in electric vehicles again last quarter. And I mean, how long can you keep riding a dead horse anyway?
You know, I wonder the same thing. I mean, I got to think that the automakers in general have got to be tired of the government pushing them to EVs. And the government should know better at this point. We, the common people, don't want them. I mean, we've spoken pretty well with our pocketbook.
Yeah, I've been saying for a long time, I recognize and I respect the premise that electric vehicles are going to be the vehicle of the future, but as long as anything with any decent size to it has a legitimate cruising range, once you get on the highway, it's fewer miles than you get out of the city. If I'm lucky to get 220 miles out of a full charge on an EV, it's not going to meet my lifestyle yet. I'm not averse to the darn things, but we're pushing them too darn fast. The technology hasn't caught up with the lifestyle of the American driver quite yet.
No, it really hasn't. And let's face it, the other aspect they say is it's more better for the environment. Well, that's just a bunch of fooey when you think how much it costs to produce those batteries. And then what do you do with the batteries when everything's all said and done? They go into the waste department, and that's not good for our overall ecology.
I can see that as well. I'm reacting merely on the surface. Basically, they don't have a product yet that matches my lifestyle. If I had enough cash handy to have two cars, yeah, one of those babies to just tool around town might be kind of interesting. But the fact of the matter is I don't have the space for two cars because I want to keep my golf cart in the garage. And I'm sorry, I want to be able to pile in the car and drive 800 miles at the drop of a hat, and I can't do that with an EV. So poo on that. And there's my editorial comment for the day. Bunch of other reports we had coming out. Like I said, Google is going to be the big kahuna that comes out later on today. You'd mentioned that some folks would end up saying, gosh, is Xerox still in business? Well, based on their quarterly report, maybe they are only partially in business right now, right?
Yeah, I'm telling you, they did not have a good quarter. They missed their earnings per share by 30 cents a share, came in at 21 cents. Revenue was also off by about $100 million. And then now they even kind of adjusted their full year guidance, declining even more. They're trading down 15.8% this morning, Dave.
Well, if you wanted to make Ford look good, you just did it.
Yeah, but I don't know that they're the biggest loser right now that I've got. Well, maybe so. They may be. I read this one wrong. VF Corporation. It may be the only winner I have. They make North Face and Jan Sports. They had better than expected results this last quarter. They made 60 cents a share versus 27 cents a share expected. Revenue was just slightly above expectations. This may be the only positive number I have today, but it's a pretty good number, up almost 19% this morning.
Hey, it's good to have some good news. I like seeing the green ink on the indexes, and it gets confusing when all the individual issues that come out are coming up kind of El Stinko. Any other indexes or indications that you saw this morning early on?
We got some nice ones coming out today. We got JetBlue. JetBlue was sliding this morning earlier. Fourth quarter revenue is expected to be down between 3 and 7% when we look at year over year. That's worse than the 1.5% that was expected. Third quarter results beat analyst expectations on both the top and bottom line, but it's looking at the quarter ahead. I mean, they're down 11.2%.
And that was after beating the street as far as current quarter earnings are concerned. So we talk about guidance being important all the time, but it's definitely carrying the day this quarter so far.
Definitely. D.R. Horton, they actually missed on earnings. They came in at $3.92 instead of $4.17 that was expected. Revenue was less than expected as well. That's the housing market showing up there. They're down 9.6%. So again, not another good sign there. We had a couple shoe companies. We had Crocs report. Crocs, they came in at $3.60 a share. So they beat by 50 cents a share on revenue. I mean, on earnings per share. They beat by just a little bit on their revenue, but they narrowed down their full year forecast, and so they're trading down 13.1% this morning, Dave. A lot of red ink showing up. The Boot Barn, they also reported. They came in at let me see where it said here. The expectation was 95 cents a share. They beat estimates, but they are trading down this morning as well. 6.6%.
You know, we've been saying all along, we've been talking about the high multiples on the valuations of stock. I'm kind of getting the feeling there's some chickens coming home to roost with this quarter. You can beat the street if you want, but by gosh, if you don't show an improvement in that PE ratio in the outgoing quarters, you in some trouble, son.
Yeah, you really are. Hey, let's make this note too. Crypto, Bitcoin passed over 70,000 again for the first time since June.
Crud. Well, money's got to go someplace, and if you're selling your stocks with lousy guidance, you might want to put it someplace else at the short term. Going to be a busy week. Today is kind of the last day without a lot of government data dump junk to talk about. Tomorrow we get mortgage applications, we get private payrolls. Thursday we get unemployment claims, and then on Friday the proverbial unemployment rate for the country, because it'll be the 1st of November then. So it's going to be real busy. We had an update yesterday on Wall Street. Basically, it was kind of interesting. The blue chips and the adventurous small cap stocks were the biggest beneficiary yesterday. 45 minutes before we open this morning, what are we looking at?
So I got a lot of red ink, Dave. The Dow right now is down about 1/3%. The S&P 500 is down a little over 1/10%. The NASDAQ 100 actually just switched to green by $1.60. Not much at all when we look at that. So, on the other side of the coin, we've got silver trading back up almost 1%, back over 34 again to $34.33. Gold's up 1/3%. Crude oil's up almost 1.2%. That's $68.18 a barrel.
And I got a sneaking hunch that probably is off of the fact that, Israel didn't bomb an Iranian oil field, but instead somebody bombed a Syrian oil field, which doesn't help supply concerns anymore either, does it?
No, but I guess not. Hopefully oil will stay where we want it to stay.
Under 70 is at least an improvement. Looking across the pond, the Asian Rim market, something must have happened in China regarding expectations of further stimulus, because the mainland Chinese markets were all off by more than 1% at the close this morning at 6 a.m. Almost everybody else was up, but China's mainland markets really took a dive overnight last night. Mixed bag in Europe. The UK markets are down by about 0.8%, but the rest of the markets in Europe are generally in modest green ink. Overall, the indexes about 1/3% up halfway through the European trading day. Getting a retirement plan together counts for a lot, no matter what age you're at, Phillip. How do I get a hold of you to get that plan so someday I might be able to retire?
Dave, that's why I created the Core Retirement Design, to help people design that retirement they always dreamed of. Give us a call, 863-382-0037, to schedule your Core Retirement Design. And then catch the Statler Financial Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
I always ask the question that way because when the boss hears me talk about retiring, his hair stands on end. All 4 of them. I'll see you tomorrow, my friend. Have a good day. You there?
All right, buddy. Take care.
105.7 Light FM and Statler Financial Services. Phillip Statler.
It's nice when you get everything on your list in one place.
You still there?
Hey, folks, again, I want to thank you for joining us today. Have a great day. Look forward to speaking to you again tomorrow. Take care now. Bye.